This week we're introducing a new segment of the bottom line, My Bottom Line, in which I tell you my conclusion about an issue facing the market or stock. This week, can Apple get to $202 a share and become the world's first trillion-dollar company? And full disclosure, I own Apple stock, so if it does get there, I will not be unhappy. Apple hit a huge new milestone this week, crossing $800 billion in market cap, the first US company to do that. And an analyst came out with a target of $202 a share. If Apple were to reach that level, it would become the first trillion-dollar company in the market. Anytime an analyst comes out with a target that is outside of the consensus, which this one decidedly is, most analysts are around 150, 160, they are often lambasted and ridiculed. How could they be so irresponsible as to suggest such a thing? When this happens, actually, you should say thank you. You should say, good, someone is shaking me out of my consensus thinking and helping me think different in this case. So big question is, can Apple get to $200 a share? Is that a reasonable target? The analyst Brian White at Drexel Hamilton laid out his thesis in a report. We took a close look at it this week. Basically, what Brian is saying is that two things will happen. One, next year and the following year, Apple will grow its earnings significantly, and the multiple, the price earnings multiple the market places on the stock, will expand as investors get very excited about what's happening. And if you have both of those things, ultimately you get to $200 a share. So the thing you should do as an investor is think about whether those assumptions are reasonable. So let's step back and look at both of them. First, on the earnings side, which is ultimately what drives stocks, Apple's earnings have been gargantuan, but in the last few years they have flattened. Why? Because iPhone sales are starting to flatten. People talk about what drives Apple. Sometimes there are talks about Macs. Sometimes people talk about iPads. Sometimes they talk about the services business. When you look at these charts, you look at Macs. Macs are flat. They're a very small percentage of the business. iPad sales are declining. And services, although they are exciting and should be contributing profitability going forward, are not big enough yet to really matter. We're talking about 10 to 15% of revenue. So what is driving Apple is the iPhone. And we are coming into a big new launch for the iPhone, of the iPhone 8 or whatever it is called, which a lot of people think will be a huge upgrade cycle where everyone stuck with the 5, 6, and 7 will immediately want the 8 and rush out and buy it. And if that happens, the assessment is that will drive earnings growth. And so Brian White took a look at that. He looked at the earnings, and in fact, his earnings estimate for fiscal year 2018 is actually right in the middle of the consensus. Most analysts think that Apple will be able to deliver this kind of earnings growth year over year. The big assumption that Brian White is making is that the market is going to be so excited about Apple's future and those earnings that it will pay a lot more for those earnings than it is today. Today, the market's paying about 17 times this year's earnings for Apple. Brian White thinks that multiple will expand to 20 times over the next year. So again, look back in history. If you look at the history of Apple stock over the past 10 years, what you find is that the stock often runs up into iPhone launches. People in the market a long time always talk about buying the rumor and selling the news. In this case, what's happened with Apple stock is that as we approach the launch of a big new iPhone, people get very excited about how big it's going to be, the stock runs up, and then often, once the iPhone launches, the excitement is gone and the stock sags for a year or two. So we are now coming into a huge upgrade cycle. Apple stock has been on the move for almost a year now. The new iPhone is expected in the fall, so it seems reasonable to think that enthusiasm will continue to increase as we approach the launch and maybe for a quarter or two thereafter. So what Brian White is saying is he thinks the market's multiple on Apple will expand from about 17 times now to about 20 times, a much bigger earnings number next year, and that if that happens, it drives you to $202 a share. So can Apple get to $202 a share? Based on these assumptions, I'd have to say yes. Is it guaranteed? No. Is it likely? It's reasonably likely. If the market stumbles, it won't get there, but if so, it's certainly possible.